Good morning, viewers. It's Monday morning, April 21, 2025. I'm your host, Sunil Thakker, or Sunny Talks Money. Welcome to ST Money 7 a.m. early morning news, where we provide you the latest, concise, and precise stock market wrap with accurate figures and numbers. Wall Street stocks ended mixed on Thursday, suggesting traders were wary of owning US stocks over a 3-day weekend with the market closed for the Good Friday holiday. Earlier during the session, investors weighed progress in US trade negotiations with Japan after late Wednesday Trump had touted progress in talks with Japan. Traders leaned towards optimism following US President Donald Trump's big comment about big progress in the bilateral talks after Wednesday's steep sell off. The country is one of dozens seeking to strike a deal during a 90-day pause, so called reciprocal tariffs. Trump on Thursday said he would have very little problem making a deal with the European Union to reduce tariffs and other trade barriers, saying the US has something everyone wants, implying access to the American consumer market. Treasury Secretary Scott Bessent said the US is giving priority to tariff negotiations with about 15 trading partners, including the UAE and Japan. In a post early Thursday, he said, every nation, including China, wants to meet. Trump also told reporters he expects to make a trade deal with China, although he offered no indication of how talks would get underway with the two superpowers. The S&P 500 climbed 0.13% to end the session at 5,283 points. Nasdaq declined 0.13% to 16,286 points, while the Dow Jones Industrial Average declined 1.33% to 39,142 points. The S&P 500 paired gains in the session's final minutes, and the Nasdaq turned negative, while the Dow Jones Industrial Average fell about 1.3%. Thursday marked the first time on record that the Dow fell 1% or more, while the S&P 500 gained on the day, according to Dow Jones market data dating back to 1928. With the U.S. stock market closed on Friday, all three major Wall Street indexes locked their third weekly decline in four. For the shortened trading week, the S&P 500 fell 1.5%, the Nasdaq lost 2.6%, and the Dow declined 2.7%. The S&P 500 remains down about 7% since April 2, when Trump announced sweeping global tariffs that he later put on pause. Economic data on Thursday were mixed. Applications for U.S. unemployment benefits fell to the lowest level in 2 months, signaling a stable labor market. Data on Thursday showed the number of Americans filing new applications for unemployment benefits fell last week, suggesting labor market conditions remained stable in April. Meanwhile, the Philadelphia Fed index tumbled, trailing all economists' estimates. A warning shot from manufacturing and uncertainty around tariffs is making businesses hesitant to boost hiring. Of the 11 S&P 500 sector indexes, 8 rose, led by energy up 2.3%, followed by a 2.2% gain in consumer staples. Energy was one of the best performing stock sectors, as WTI crude climbed about more than 5%, its biggest weekly gain this year. In company news, health insurers slumped after United Health Group Incorporated slashed its earning outlook for the year. Disappointing results from United Health sent its stocks sliding 22%. United Health shares price has an outsized effect on the price-weighted Dow index as the company's plunged weighed on the blue chip Dow Jones Industrial Average, which tumbled 1.3%. Other health insurers slumped, with CVS Health down almost 2% and Humana losing 7.4%. Eli Lilly surged 14% after the drug maker said its experimental pill worked as well as blockbuster drug Ozempic to lower weight and blood sugar in a trial of diabetes patients. Aside from United Health, earnings from American Express, Blackstone, and other companies rolled in. The trade war remains in focus. Nvidia fell nearly 3%, adding to sharp losses from Wednesday after the announcement of new U.S. restrictions on exports to China. Most of the Magnificent Seven tech stocks ended lower on the day. Alphabet shares dropped 1.4% after a federal judge found Google was illegally monopolizing two online advertising technology markets. Apple climbed 1.4% with the iPhone recovering from some of its recent deep losses. TSMC, the world's largest contract chip maker, posted a bigger than expected jump in its first quarter profit. In extended trading, Netflix rose 2.5% after the video streamer exceeded Wall Street expectations for quarterly results and offered a bullish revenue outlook. Meanwhile, President Trump stepped up his attacks on Jerome Powell, saying the Federal Reserve Chair's termination cannot come fair fast enough. In an early morning social media post and again at an Oval Office briefing, the president argued Powell has been too slow to cut interest rates, even as the European Central Bank cut rates a quarter percentage point on Thursday, its seventh cut in 8 meetings. Thursday afternoon, Trump had spoken with Kevin Walsh, a former Fed governor, in recent months about potentially firing Powell before his term ends and possibly selecting Walsh to be his replacement. Later in the day, Trump told reporters he could force Powell out if he wanted to. The rebuke came after Powell pierced the market calm on Wednesday by indicating he would take a wait and see approach to how the trade war would impact inflation, dashing hopes for an immediate intervention. But he hinted the central bank could give priority to fighting inflation over the other part of its mandate, maintaining a strong labor market. The moves were far smaller than the prior week when Trump's trade war machinations drove wild swings in stocks, bonds, and the dollar. All the tariff policy pivots have eroded confidence in the world's reserve currency, with the dollar extending its losing streak into the third week. It has fallen for 6 of the past 7 trading days, a depreciation that has rippled through the world economy. Meanwhile, in the bond market, yields on treasuries climbed on Thursday as U.S. government bonds paired weekly advance. 10-year Treasury yields rose to about 4.3 to 5%, snapping 3 days of declines. In commodities, gold hit a record high earlier on Thursday on demand for havens before turning lower. My take: new feud between old foes. The trade war has added a new pressure in the already seesawing tariff announcement. President Trump's sallies aimed at Federal Chair Jerome Powell. Powell, from day one of Trump's return, has been insinuating that he will not resign. And Trump has fired the latest salvo that he can't wait to get rid of Powell. Tensions between the White House and the Fed could unnerve investors who see the bank's independence as a foundational appeal of U.S. markets. Questions around Fed leadership add a wild card to markets already struggling to adjust to shifts in trade policy and international relations. The independence of the Fed will be a sticking point in the days ahead as tariffs bleed through to consumer prices. Continued confidence in the Fed, but a loss of confidence in the administration has shaped the market response today. Volatility, prayers for well behaved inflation expectations, and no stagflation panic are being decided. So, if you like the tariff debacle in the market, you will love the loss of Fed independence trade. Call this a new feud between old foes. And that's the wrap for today, my dear viewers. And if you got value from this, please do subscribe, like, and share this video as much as possible. You can call me at st-money.com for any further information. I'll see you again tomorrow morning. In the meantime, happy investing. Stay inspired and remember, it's all about money.